Good morning and welcome to this Marketplace Alliance event. Just to say one or two more things about Marketplace Alliance. One of the things that we tend to forget as Christians is that our Christianity is supposed to be felt in the world from Monday through to Saturday. And what we do on Sunday is just get a recharge and like pep talk, or like Pastor David will say, halftime talk. That's what Sunday is supposed to be about. So we are supposed to be in the marketplace. Now, in order for us to be in the marketplace, we're saying a number of things. Once you start talking markets, you're talking about customer engagement, whoever customer is, stakeholder engagement, whoever those stakeholders are. And you've got to be giving value, right? That's what we say about markets. So, as a Christian, what value are we bringing into the marketplace? And how do we deliver that value? That's what Marketplace Alliance is supposed to be about. It's supposed to help us plug all the things that we hear on Sunday into the marketplace. And in all of the things that are crossing your mind based on what I've said so far, one of the bigger or more important things you need to think about is, how do I maximize the resources in my hand? How do I, if you feel led to, for instance, create jobs, how do you go from creating 10 jobs to creating 50 jobs? How do you go from creating 50 to 1,000? Right? If you feel you are called to be an investor, a kingdom investor, let me use the different phrase, a kingdom financier. So you bankroll kingdom events. Okay, how do I grow the capital or the cash in my hand to the point that I can do more? If you feel you're a trainer, you are called to train people in the market, how do I build up those skills to train and do more in the marketplace? And they say iron sharpens iron, right? It's only people like you that have similar ideas to yours that can sharpen you, that can understand what you are going through and give you their own perspectives, because guess what, we're all in the marketplace, so we all have different experiences and we can learn from each other. So that's the real essence of what the Marketplace Alliance or Marketplace program is supposed to be about, and that's what it is about. And today we're going to be listening to building resilient wealth, okay? Insight, strategies, and opportunities in a volatile market. The interesting thing is that the marketplace that we are in right now is unique. It's unique. It's different. It's different from the marketplace we had 7 years ago. It's different from the marketplace that existed when we were in school and we were aspiring to become lawyers, engineers, doctors, whatever. Right? So, in the marketplace that we are in, Nigeria being the base, and the peculiarities around Nigeria, what are the opportunities? What are the threats? And how do we address them? And our guest speaker today is actually not a stranger to the house. In years past, he used to be very active, actually, or quite active, I don't know which word, in Marketplace at TPH. So he's not new to the house. Is there going to be another introduction of him? Okay. So I will just stop there and hand over. Before I hand over, can we just stand up and for a word of prayer? Heavenly Father, King of Kings, Lord of Lords, we, your children, have come again this morning, and we are gathered to become better stewards of what you have put in our hands. Whether it is money, whether it is relationships, whatever it is that you have put in our hands. And learn strategies about how we can further birth those dreams, those visions that you have shared with us. Father, as we gather this morning, we pray that you breathe on everything that is going to happen here, and that we'll go away richer than when we arrived. Thank you, Heavenly Father, because we've prayed in the name of your Son, Jesus Christ. Amen.
Thank you, Vika Aya. 1 or 2, 3, 4, 5 things that you've said. Go ahead.
Okay, thank you once again, everyone, for joining us this morning at this second meeting of the Capital Alliance team. So just before I introduce our guest for today, I just wanted to do a little icebreaker where we go around and everyone just mentions their name and where they're from. I'll start with myself. So my name is Ebuka Obieri. I work with ARM Investment Managers, and I lead my risk management team. Thank you.
My name is Uzo Ebuchulam. I work with General Electric, the power business. Build power plants and all that. Yeah.
Okay, my name is Boye Fora. So I wear two hats. I run a project management consultancy, and I run a renewable energy business for Nigeria, Jaza Energy.
My name is Abiola Odeyemi. I work with Nitrous Industrial Gases PLC. I head the finance team. Thank you.
Good morning, everyone. My name is Chinwe Kalu. I wear two hats as I attend this meeting as CEO of Corporate Wellness Services, a wellness services company, and I work with Harley Reid Nigeria, a financial consulting company.
Good morning, everyone. My name is Bolanle Adeson. I am an entrepreneur, but I also consult for the Lagos State government.
Good morning. My name is Tola Koderamola, and I run a bank. I used to work in a bank, and now I presently run my own food brand called Ajara Foods.
Good morning. My name is Nana Otedola. I'm the founder of a dry cleaning and laundry business called Garment Care.
Good morning, everyone. My name is Patricia Ojora. I run Promo Print and DWL.
Good morning. My name is Ese Falaye. I work with a company called Gentle Energy Solutions Limited.
Good morning, everyone. My name is Titilayo Afeboame. I run a care home in London.
Good morning. My name is Olufisare Animashan. I run a HR outsourcing company called Kazibora.
Okay, good morning, everyone. My name is David Olabi. I work with Total Energies as a production manager. Thank you.
Good morning. My name is Debo Gumefung. I wish I run something like I've been here. I'm an IT consultant for oil and gas.
Good morning, everyone. My name is Adeni Hidrojai. I'm CEO of Garment Care.
Good morning. My name is Patricia Adoribigbe. I work for Africa Finance Corporation.
Good morning. My name is Haradule Kutei, entrepreneur. I run a company PC Global. I'm into real estate.
Good morning, everyone. My name is Kutei Luafi Ikewa, and I'm a student.
Good morning, everyone. My name is Olubumi Kutei. So I work as a tax consultant with Christine Pedabo.
Good morning, everyone. My name is Affion Williams. I'm the founder of Real Food.
Good morning, everyone. My name is Comfort. I'm a project coordinator. I work with Garment Care.
Good morning, everyone. My name is Joel. I'm a travel professional and sports consultant.
Thank you. Good morning, everyone. My name is Adenike Kuti, and I'm a private equity professional.
Okay, thanks, everyone. So I was just tapping into what Avika said as part of the tenets of capital markets, to just try and know ourselves a bit better and leverage off the massive wealth of experience that's no doubt in this room. So thanks, everyone. So now I just want to introduce our very special and very seasoned guest, who is going to lead us in the building resilient wealth, insight, strategies, opportunities in these are very, very volatile markets. So his name is Mr. Idowu Thompson, and he's a group executive of private banking and wealth management for First Bank Nigeria. He's a very highly skilled bank executive and has experience, and is a financial services professional with strong Africa and offshore experience in senior management and several executive roles. He currently functions as the group executive and global head of the private banking and wealth management divisions of First Bank Nigeria. He has close to 3 decades of professional experience in strategic roles in banking and financial service sector in Africa and North America. While his experience broadly spans consumer banking and public sector, treasury, he does also hold uniquely strong skills in investment advisory and strategy, wealth management, and managing HNI clients and ultra HNI clients. He's a graduate of the University of Lagos and Cardiff Business School. He holds several certifications from the Canadian Securities Institute. He's also a designated Canadian seniors advisor and holds the certificate in family wealth advising from the Family Firm Institute, among several other certifications. He's a chartered senior member of the Chartered Institute of Securities and Investments UK, and has completed several executive programs in person, including the Financial Institutions for Private Enterprise Development and at the Harvard Business School, the Finance Program for Senior Executives at the University of Oxford, and the Advanced Management Program at the Institute for Management Development in Lausanne, Switzerland. He's a 4-time honoree of the Best Annual Awards at the Bank of Montreal, and has led the private banking and wealth management team in his current role to win the World Finance and the Global Finance Best Private Bank in Nigeria Awards for several consecutive years, including 2025. In recognition of his expertise, he has been invited and served as a panelist and speaker at the Financial Times and Professional Wealth Management Global Wealth Management Conference in the UK. And lastly, he holds a very strong professional ethics. He is passionate about lifelong learning and building relationships with depth. He has a passion for sports, music, and writing, and has co-published one book, Lessons That Life Has Taught Me. Please, let's welcome him to the stage. Thank you.
Good morning. I'm hearing you read all that. I had to look back at myself and ask, but thank you very much for the opportunity. Again, this place is in many ways home. The vicar is my Egbo from Ibadan, who was my senior in international school. Some of you may not know that. And also quite a few members of the congregation here, or sorry, I say congregation, or the meeting here, people have known Boye from Standard Chartered, and quite a few, Patricia. So it feels like home, but it still feels unusual standing here. Also listening to some of the credentials and the wonderful introductions of yourselves, I'm just asking, what do I want to come and teach you that you don't know, or say to you that you don't know? Also, sorry, Mrs. Otedola, nice meeting you. Yeah, thank you. But again, I'll do my best, and I'll put it this way. These sessions are not just sessions to expound what you know, but they're also sessions where you're also learning. Right? There are 50 people in the room, there's one person presenting. The way I say it is I'm learning from 51 people, including myself. So please bear with me. Some of the things I may say to you may seem quite basic, but I guess for me the most important thing is the art of being able to reflect and also adapt some of these things to your life. So it's building resilient wealth insights, strategies, opportunities in volatile markets. Nikki, I'm not sure why we chose such a long topic, but it's okay. I had to sit down and properly dimension over and over again. But honestly, the conversations, I want to make them real and less technical in many ways. And also because this is a church environment, I was tempted to throw in Bible passages and all of that, but I'm not quite sure I'm that qualified to do that. I also did not want to make it a bank thing where I'm pushing or selling financial products to you, so I won't do that. So let's just even start from the basics of what is wealth. A lot of us have been in Nigeria. We've seen Nigeria evolve, if I can use the word. I returned to Nigeria in 2008. And at that point in time, that was when we had the Blackberries and all of that, right? We've also seen how things have evolved very quickly over the years. The lifestyles, the social behaviors, the economy and all of that. The volatilities, like we say. And then I ask myself really, okay, so we're talking about building resilient wealth. So what is wealth in itself, right? So again, 7 types of wealth. And I'll just move into them. So the financial wealth often is what we focus on the most. Or we hold an investment asset. We have fixed income, we have ETFs, we have mutual funds somewhere, we're looking at our net worth. Every time in the media you're reading somebody's net worth has gone up by X amount of money, has, gone up or gone, so just a lot of conversations around financial wealth. So what this gives you is the freedom to live your terms without stress, basically. So what's social wealth? Your network, the people in this room, the church, your relations, right? Social capacity, right? You need to get things done. You think, who can I call? That's a form of wealth for us. Physical wealth, a lot of us are becoming more conscious of this. I will share personal examples. In this very same Capital Club about 2024, I had my son, 2 sons, and their mom, my wife. We came for an event. In August, 8 years later, my first son had passed on, right? Some of those things we may not be as conscious of, because for a lot of us, we focus on the first, which is the financial, right? But your physical well-being, I will dare say that if anyone has a headache today, how many of you can go into the office or perform your activities of daily living? So that energy, the vitality to enjoy life is also becoming more significant. We're hearing stories about a lot of young people dropping dead and all sorts of things. And sometimes we have to sit back and pause. So what is wealth to us? I mean, what is well-being to us? Your emotional wealth. COVID-19 came. We were locked in for how many months? Right? I heard drug usage went on the high. Depression, people living alone and all of that. It says a resilient mind that thrives in any situation. The soundness of your mind, the soundness of your being. Your intellectual wealth, the mind that's always growing. We want to improve. We want to be able to learn, right? Nick was a guest too. We want to be able to learn, right? And make an impact on others, right? Mentor other people. Time wealth. Some of us who started the cross-border thing, families apart, we know what it means. We know the strains it brings, right? We know the quality of the relationship some of us may have lost, right? We know the costs of those things, but we also know that some of those costs may be considered necessary in some situations. And of course, your spiritual wealth, which is what this is all about. I hope I'm making sense. Okay, so what is resilient wealth and what are the goals? The largest vehicle for wealth largely is the family business or family businesses. And it's estimated that over 50% of GDP in most countries are contributed by family businesses, which contributes about 8.9 trillion in revenues and employs over 25 million people. So again, we cannot de-emphasize the importance of that. Family doesn't necessarily mean that you're married or you're Mr. or Mrs. Africa, by its nature, your neighbors, your cousins, that's family for us, right? But the key thing I also wanted to bring out when we're talking about resilience is the fact that that's single in the Bible that wealth gained by deceit what grows wings, right? Wealth is not something that you sit on and hold forever and you feel it stays. You're going to go through situations where you either feel like giving up, or for a lot of us who are entrepreneurs, we ask ourselves, what kind of economic climbs are we dealing with? It's tough, we know that, right? So that's where the concept of resilience is. But you look at the fact that families in itself, it becomes even more difficult to transfer wealth. So where's the resilience? And in a study that was completed by the Williams Group of 3,200 families, found that over 70% of those families lose wealth by the second generation. So these are things we need to think about. As we go around trying to build things and numbers and be wealthy, and let's ask ourselves those questions. Where's the resilience? What's the importance to us? So again, resilience to me speaks to sustainability. But it's not just about sustainability, it's about how you want to live life, right? So you could have the largest, investment portfolio globally, but yet, in the true sense of it, you don't have the resilience of the things that actually matter or bring value. I take the Great Recession as an example of one of the things, or examples of volatility. Persistent and widespread contraction in economic activity. I think it was the first time that the US had 14 recessions between 1929 and 1939, called the Great Depression. The stock market crashed on October 24th, 1929. People were jumping off buildings and, committing suicide, and so many things were happening. 13 million shares were traded as investors dumped on the market. Some may see ourselves as remote and not facing those situations, but I can say to us in this room, wait until life faces you. And those are the questions we need to ask ourselves. So what are the goals and why do we seek resilience? It's not just about keeping money aside, right? It's also about leaving a legacy. What's a legacy to us? Your name, right? The money you've lived, how you've raised your children, right? And so much more. Your ability to be able to support your lifestyle after work. So a lot of us have thrown ourselves. I've worked almost 30 years. I love it with a passion, and that's the reason I'm still in it. But I also know the toils that it brings on the body, on relationships and so many things. But again, the ability for us to be able to sit down and ask ourselves, what are the priorities to us? So I say Proverbs 22:7 says, just as the rich rule the poor, so is the borrower servant to the lender. It's important that you have wealth. We won't get that mistaken at all, right? Nobody wants to go around begging. But at the same time, it says that good people leave an inheritance to their grandchildren, but sinners' wealth passes on to the godly. I know we like using this a lot in the church, especially when we want to compromise and take money from people who should not take. I'm sorry. Maybe not here, but you forgive me, I'm like that. So we've spoken about resilience and the goals. I want to for us to look at some of the things we're dealing with. Great country, I love the Nigerian cycle, the energy, what we have. But again, I always say, if as a businessman you thrive, or business person or woman, you thrive in Nigeria, you'll probably thrive anywhere else in the world. I was in Ghana about 2 weeks ago, and I used to cover that market in my last employment with Standard Chartered Bank. I was head of investment advisory and strategy for Africa then. So I used to have regular visits to this country, and I loved the calmness. But we Nigerians will go into a place and say they are slow and we're rushing and we're being ill-mannered and all of that. So I go into a place where people treat you with civility. Yes, they've had their shocks and all of that. And I begin to ask myself questions. Again, we'll pack that and talk about that later. But again, these are some of the indices that may bring around volatility for us. So FX depreciation, why does that matter to us? A lot of us have lifestyles. There's hardly anybody in this room who's not multi-jurisdictional. And my definition of that is that you either have a husband, a wife, or children in school, so you need money, cousins, something. You need money to be able, in FX, to be able to support that lifestyle, right? So if you have an exchange rate that's significantly fluctuating, it makes it more difficult to plan, particularly when your income, whether as a business person or as an individual, is finite, right? Also, when you now couple that with the fact that we've also grown into a lot of lifestyle changes, the internet age has come, there's a lot of, I mean, this year alone, I probably have about 4 or 5 destination weddings, you know. Again, you can't go to all, but you choose the ones you can attend. So you look at the exchange rate. Over 10 years, 348% depreciation, right from 2017 to 2026. We've had a good measure of stability in the last, you know, if I probably would say in the last year and a half. And I think what that does for us is the ability for us to be able to plan as business people. If you speak to most people, they'll tell you that one of the things that bothers them most is the inability for them to plan. So even if it's high, you know it's high, it's there, but you can plan on it. So that's the exchange rate for it. You can see right from 2017, things were there, then all of a sudden 22, 23, 2024, 2026. Black market rates open. I think I bought money at some point at 1600 months back, right? So these are the things we face, that volatilities that we have to deal with. Inflation, it's one of the greatest enemies of wealth retention, right? One of the greatest. So it's you're holding naira to the same value. It shocks me the amount when you go out and eat, and the basic meal will cost you about 25,000 naira today. A year or two before, 6,000-7,000 naira would get you, even lower. Even the things that the lower income people will go into, and fast food, at least you're spending 5,000, 6,000 naira. So you can imagine what the people down the chain are also going through. So it's there. At some point it was at 32%. You can see that. Again, even at 15%, people complain that there's a struggle. MPR, those of us who are business people, this is our greatest graph. How do I go and pay interest to a bank at 30%? You know, yesterday I was doing a calculation for somebody who was really, I said, you know, why am I paying? He's abroad. I said, why am I paying so much mortgage, Banana Island? My rent was jacked up from 25 million to 45 million. He says, I might as well just go and buy something. So I called him and I said, let me plot what your monthly payments will be. And by the time I looked at what he was doing, I mean, he has a backstop cash, but he wanted a mortgage. I said, your monthly payments will be about 17 million naira, you know, to fund the mortgage. So again, these are the realities of what we're dealing with. Not the fault of the banks, not the fault of it, but it's the reality of what we're dealing with. Treasury bills, money market trends, we can see that, and inflation, we shouldn't. But treasury bills, we've been quite fortunate. It's worked well because on the other end of the coin, those who have held naira at some point in time could easily sit on their money and make 18-19% at some point in time, and even up to 21%. You know, there's probably nowhere in the world, maybe with the exception of, I think back in the past, maybe Ghana, that had, and some of the maybe emerging, 1 or 2 emerging markets that would have rates that high. So these are some of the other things. I won't run through them one by one. This shows you more of the opportunities, what the bond yields are showing you. So the 5-year, 10-year yield, I've plugged that. Also the Eurobond. I'm also assuming we all know what the Eurobonds are. I've just been speaking. We all know what Eurobonds are. Are you doing this too? Okay, so basically, Eurobonds are debt instruments that are either issued by sovereigns or corporates in a currency other than the currency of their jurisdiction. I think I got that right. So some people will think Eurobond means you're issuing money in euros. No, most of the Eurobonds we have are actually issued in dollars. Some people also feel that they are safe, and maybe not necessarily so. So you have to look at things around the risk of the issuer and all of those kind of things. We've had some defaults. Ghana defaulted. Some of us had money in Ghana. Again, it brought the reality of life and what we have to deal with, right? So, anyway, let me pack that. So this also plus the average Eurobond yield. So these are, in some ways, demonstrating volatility, but also shows the opportunity. And then the NGX, it's performed well. Everybody celebrates. A lot of the bourses globally have also done quite well. But I always say to people, when you're talking about equities, and don't get me wrong, these are my opinions, is it about looking at paper profit and feel good about it, or do you have a conscious strategy to ensure that you actually realize value from what you're holding? So at what point in time do all of that becomes cash or cash flow for you? Precious metals, I've chosen that as an example of volatility. Good in the sense that we've seen an upswing. I've plotted that over the last 20 years. So when you look at gold at about 1151 an ounce in 2015 and about $4,175 as we speak. Platinum, the same thing, $905 an ounce to about $1,600. It's good when you're in there at the right time, but if you're in there at the wrong time, precious metals tend to take a long time before they come back in recovery. This is an area I felt I should mention. Again, my opinions. I'm not here to speak about politics, government, or anything. We've had a lot of progress, as a nation, and all of that. But again, some of the things that have been done to create structure would also bring to some, in fact, a lot of us, some discomfort, even if it's for the short term. The Nigerian Income Tax Act. I used to say when I moved back to Nigeria, look, tax planning was not such a big deal for people. We didn't have to worry about it. It was one of those environments that you didn't have to pay tax. But things have changed. And for those of us who've seen what the new Income Tax Act that was signed in 2025 has done, we know that we need to become a lot more conscious of tax planning. And I've seen a lot of my clients coming in. Even as a matter of fact, I have a relationship with Anderson. There used to be Anderson Tax for the purpose of advising clients that I see that clearly need a lot more structured advice for tax planning. So it's a unified tax framework. But some of the things that you see, broader coverage, so fungible assets like bitcoins and all of those things that people are making money under the table and all of that. All of those things are covered under the new Income Tax Act. And trust me, the proxies that these guys use, you'll be surprised. Some things as simple as your phone bill and lifestyle. I've heard people taking pictures of them spraying at parties, and they will come after you. Yeah, so those are the reality. It's a holistic income assessment. Some of us who dual file, Canada, Nigeria, we know what that means. So if the marginal tax rate here in Nigeria is, let's say, 25%, and on that income bracket I'm meant to be at 48 in another market, it means I have to go back and file the difference in my country of domicile, right? Not the country I work in. And what that means is that some of us would have tax obligations outside of where we are. Like I said, a lot of, you don't have to say, your looks tell me a lot of you are multi-jurisdiction. In a good way. So these are things we need to be. Residency test strengthened. No, before you could just go, it doesn't matter. But now they're looking at global income. What it seems is like they've taken the best of the tax laws in the US, IRS, the CRA in Canada, and the UK tax, looked at them and put them all together to make sure that there's proper coverage. Indirect transfers, offshore disposals. For business people, expanded Nigerian company definition. Please, I'm not a tax expert, but I've been trained enough to know the triggers and understand that, look, when I see people, I always say, look, show responsible tax behavior. Don't try and manage these things. It's better to get an expert who would properly structure your books and also guide you on how to make the most optimal decisions. Mandatory tax planning disclosure. So for those of us who've always advised our clients, we can set up trusts, we set up a lot of vehicles where we feel will help, create tax efficiencies. Those efficiencies are not the way they are. You have to disclose them now. And it says a required wealth strategy review. They must, as HNIs, all of us, must reassess income flows, assess exits, exposure, and seek professional tax planning. The implications are spoken to already. Are you with me? I feel I've said things that are very solemn to us. Yeah, that's the mood I read. But I think it's important that, honestly, that we know these things. I, as a banker, know many things. But I will tell you the truth, it's not all of these things I have done for myself or managed. Because the time, for those who are bankers will realize that your time is not necessarily your own either. So again, you have to force yourself to prioritize. So what are growth opportunities and investment themes? And let me just speak broadly. I didn't want the session to be like textbook and say, no, these are products and all of that. So we talk about the global diversification, investment migration. The world is a much smaller place. We moved from a point where people were doing QWRT, or what do you call the Blackberries, to a point where people don't even buy cameras anymore. Your phone is your camera. Technology has moved. I remember I was still used to develop films at some point in time. If you speak to the Gen Zs now, they don't even know what that is. So it's the phone, right? So it's important. The world has also become global. Social media has opened up so many things. You can't hide. Those days, people, you have to go and buy a newspaper before you read. Some of us, our parents, Sunday routine, they'll go and buy papers and they read. You don't have to wait until you go to the vendor. Information is provided to you real time. So you know what is happening, not just in your market, but also in other parts of the world. So you need to explore that concept of diversification globally, just not seeing yourself as a being who operates a business in Nigeria. What are the local opportunities? You need to prioritize them, and also, take a structured approach to this. I'm not going to talk about allocation to asset classes or whether equities or fixed income or whatever or are better, but there are opportunities locally that you need to continue to look at. Let me say something. A lot of us, if I can use the word, and I don't want to use the word mistake, but we tend to assume that real estate it's a sure banker. There's no asset that's a sure banker, and that's the reality. You need to be conscious of what the strengths of each of those asset classes are for you to be able to take the right decisions. I remember many years back, I had somebody who was really very wealthy in assets, but I remember how tightly strong he was for cash flow. And we used to have to kind of bridge that until we were able to resolve the issues he had. Sectoral allocations, long-term growth sectors, AI, digital infrastructure. Some of us, please Google and you look at the adoption rate. When Facebook started, it probably took about 2 or 3 years for them to reach 1 million users. Go and look at what happened to, what's this guy's called, the AI guys that started ChatGPT. We're talking a few hours. And that's the reality of adoption. That's the speed at which information is flowing. What are strategic local plays? I didn't want to put anything. You can look at placements, IPOs, I work with First Bank, and of course we've, a part of a group was also involved in a major, as advisors in recent private placement and also the upcoming IPO. I'm not playing brief for anyone, but I'm just saying that we keep our eyes open for opportunities. And one of the advantages of, we know, a lot of us are financial people, pre-IPO prices, what you expect afterwards and all of that, just a benefit or likelihood for your upside, and growth. growth opportunities, investment themes. I'll leave this growth stocks, value stocks. So again, it's for us, if we're looking at things around the equities market, what exactly is the strategy that we're pursuing? Some of us don't have a strategy. Our strategy is what our neighbors tell us. You know, sometimes we have somebody who's very good rhetorical skills and tells you, oh, this is wonderful, we get moved, you know, and then we take decisions. Your decisions have to be structured, especially being self-employed people. A lot of us who are self-employed, you have to be very structured in how we run this. These are some of the opportunities, and I'm looking at local equities market, and you can see it. We've moved from a time when, I think it was in 2025, when we exceeded 20% for treasury bill yields, the primary market, to a point in time where we're looking at something between 16 and 17%. I think right now we're at the levels of 15% or thereabout. Looking at the Nigerian stock exchange, like the equities market as well, wonderful. 51.1 returns year to date in 2025. The market has looked good. There's a lot of foreign interest in our market. But like I always say, and we all know, portfolio investments are also flighty. They come in, they can go out. I used to work with a Canadian bank, and part of some of the assets that we used to sell, we had the emerging market funds and all of those things. A lot of those funds also had some underlay of, you know, our markets in them indirectly. Once it's seen that, look, markets and things are not looking as conducive, they move out and they exit, they go. So it's one of the disadvantages. Year-to-date returns is still a healthy 47%. The questions you want to ask yourself, do you want to get in at the upside or downside? Who knows what the upside is? Who knows what the downside is? We don't know. Only God knows with the insights. Mutual funds. 2025 assets grew to 7.67 trillion. Very attractive. The money market fund. The market is still basic. I mean, I worked in the market where we sold a lot of more complex funds, you know, science and technology, all of those things, and the foreign funds and all of that. But if you look at most of the banks, you'll find out that the focus is more on a few funds, maybe 10 at the most. But the good thing is that a lot of the offshore funds are also available through different means. Real estate. I just took the time to plot what's happened. You know, COVID-19, we saw the decline. And you'll forgive me, this may not be 100% accurate. But again, it's just to give us insights as to where we are per square meter, right? Old Ikoyi, Lekki Phase 1, Victoria Lands, Shangote, Do, Agungi. By the way, areas that we used to feel were down the market with the coastal road, Shangote was opened up, right? So again, the dynamism of being business owners or investors means that, one, we must have access to information, and two, we should be able to act on information. So it's not enough just having access to information. You must be able to act. A lot of us look back and say, hey, if I had done this when others were doing it, so what were you doing then? You know, some of us want to play it safe. You want the first person to go try it and see whether it works or not. And then you now get upset when that person reaps the gain of, you know, being the first person who takes risk. So again, this is there. A lot of places globally are being gentrified, right? It's very common in the States, right? You see that in the UK. Brixton, gentrified. So again, I'm not a real estate person, but it's for us to look at those opportunities. I'm not even sure this is correct at 1.6 million price per plot for, billion for Ikoyi. But what I can say is that I've seen the craziest prices. Somebody called me one day and said, oh, come on. If you have money right now, we're doing a project right now, just bring, it's 800 million. This is an apartment, right? This is an apartment. I said, but if you bring 500 million, now, you're okay, lucky. So I looked at my life and I said, but that's where Nigeria is. What do we earn? But you know, there seems to be a capacity for, anyway, without saying too much, it's there. Cryptocurrencies. Some of us remember Hush Puppy. That's one of the names that popularized crypto for the wrong reasons. But a lot of good things are happening with crypto, right? Over 59 billion between 2023 and 2024, right? In Nigeria, Nigeria topped among top 3 globally. Bitcoin remains dominant. Stablecoin, basically, I'm not sure if we know what stable coins are. But stable coins are basically backed by currencies. I mean, putting it simply, right? Units of currencies. And so they've become a bit more official. A lot of people are using it for transfers, trade, and all of that. So it's become an efficient tool. As a banker, I always say, people say age is a disadvantage. I say no, age is a big advantage if you choose to make it one. And the reason I say that is that you've seen markets and things that have happened through the years. But if you've taken the pains to also remain current and be contemporary and read and educate yourself, you're probably one of the best positions to take much better decisions than people who are coming up behind you, because they don't have the benefits of those years of seeing. So again, it's important. I'm not a fan of, and this is my opinion, crypto, but again, I have to accept it as an investment or wealth person that this has come to stay. So launch of NGN stablecoin in 2025, right? And institutional adoption seems to be rising. It was in Toronto Center I first saw an ATM machine. It was for crypto coins. And I felt like a bushman. I hadn't seen one before. But that's the reality of where we're coming to. Alternative asset classes, private markets, VCs, you know yourselves in the room. You know it more than we do. Real estate and offshore REITs. There's a lot going on offshore. But I was having a conversation with somebody, said, looking at the property, Atlanta, buy or not buy or not buy or not, and we're trying to dimension it. Homeowners association fees will take a lot of, the gains on properties. And when they call you and say the furnace needs to be replaced, you also have to be there and all of those things. But again, it's nice to have offshore, I think, but for me, one of the greatest things is looking at the long-term value of real estate and also using it as a tool for generational transfer, right? Macro tailwinds, it's crazy, but I won't say so much. Oil prices, inflation, we've seen it all. That. Diaspora demand, we talk a lot about this. Between 24 and 26 billion in 2025, right? Driving a lot of activity. All of a sudden, Nigeria has become a luxury-focused market. I think one of the most abused words that we have is the use of lounge. Everywhere is a lounge, right? And everywhere is luxury. So that's what we see. So what is volatility? Well, we've come across as volatile, uncertain, complex, ambiguous. Which one of these words can you relate to the most, please? I'm asking questions. I've been talking all morning. Which one can we relate to the most? Is it the uncertainty? Is it the complexity? Is it the ambiguity that gives us concern? Which one worries us? I think it's the uncertainty. Remember what we said earlier, that look, people worry not so much about the fact that the Naira is devalued, but I think what they worry most is not knowing where it would be. Because all of a sudden, you could have your lifestyle eroded. You're feeling like, I'm there, I'm good. And you're sitting on a few billion Naira. And then something happens. And please, I'm not in any way advocating that the Naira is not good or making a statement. All I'm just saying is that the decisions, either as an employee or as a business person, has to be with the global perspective, also has to be made in a way that you also look at your own personal circumstances. We've talked about all these things, higher rates and all of that. I won't. But again, this is what we have to deal with. So what are some of the strategies of building resilient wealth? Without being too prescriptive, we need to set goals. Sometimes we feel we know our goals. One of my jobs early in my years working in a Canadian market was advising clients. And I used to use the word, we help clients articulate their goals. We don't set your goals for you. So if you want to take on 4 wives, I'll tell you that's fine. But I will also show you the cost of what it means. I'm just saying, we're cultural, and all of that. So it's not about giving a value judgment, or if you decide you want to be playing polo, and you know what the cost of, keeping a stable hand and all of that. I'm not going to tell you not to do, but my concerns will be, look, are you at a point where you are able to afford what you want to do? So you need to set clear goals. Goals around retirement, goals around generational transfers. Some of us feel that we're going to be there forever. You can't. And I think the beauty of my experience, I've worked with a lot of high-value clients in the country. I think what has humbled me is what I've also been able to learn from a lot of them in various circumstances. And also from their most vulnerable moments. Some would open up to you. Some of the things you hear, you would never read them in the pages of the paper. And I wish sometimes I could be able to take permission and say, can I share this? We must set clear goals. Discipline in saving and investment. It's amazing the way we are here. You can become poor easily by the demands of others. It's true. You don't keep track of what you're writing. Now that transfers are easy to make on the phone, you're transferring money. Some are asking for high limit. They'll give me 4 million, 5 million. By the time you're transferring 2-3 million a day, like, how do you keep up with that? Philanthropy has to be structured and planned. That's the truth. It's not emotions. So you have to be disciplined, set your goals for investing. Cash is king. Those who smile the most are those who have the liquidity to be able to take on investment opportunities. While others are running helter-skelter and the banks are squeezing them in every way, they're just looking for somebody who will create a window for them. You're not being Tom Machiavellian, you're just being a business person, right? Those opportunities are there. First sales and all of those things. I spoke to at the beginning about the fact that by the second generation, over 70% of those who have wealth would have lost it. So it's difficult passing on to the next generation. We need to be mindful what we're teaching them. I say two things. A lot of us, Vika was my senior in school. I went to schools, maybe it was at university, I went for a master's abroad. But it's the reverse. I look at most of my nephews and nieces. I'm not sure anyone has done more than high school here before they are gone. And once they're gone, I'm not sure how many have visited Nigeria or how often in the last 20 whatever. I mean, some of them are 30 now. So these are the realities. So what happens to, the wealth? What's the essence of the resiliency? Concepts of suitability. And these are some things that are hammered into us. Products and the risks that you take must be consistent with your profile as an investor. Don't say that, oh, I'm aggressive, and then, we begin to take some illogical decisions. And sorry I say that, but you see a lot of that, or emotional decisions, which also leads to the concept of asset allocation. These are things we help with in private wealth. We sit down with you, we help articulate your needs. We help identify those gaps. For those in paid employment, when do you want to stop work? And what are the kind of incomes or things that you need to make life meaningful, continuous? It's funny how even physically we change, and we don't know that we've changed. 10 years moves, 10, 20 years moves. We were not what we were, years back. And as you see children growing taller each day, also realize that like somebody says, look, for a lot of us, we spend more years on earth than we have left, but we live long by God's grace, right? Staying invested when you should. It's not about knee-jerk or following example. People talk NVIDIA, all of these things, but just have the concept of what you're doing, and I'll go through some of the offshore options in a bit. So fallback or when I say fallback or paranoia, like some of us, it's like the hair that stands in the middle of the road and headlamps of the car that's about to crash. Sometimes we don't know what to do. And the decisions we take, we're either not doing anything or we're doing the wrong things. We need to be able to set the right goals for us. So in the context of all the 7 things I've listed, and move on. So these are moving to the global investment themes. I won't spend too much time on it. This is from BlackRock. So they've talked about digital disruption, the fragmented world. Who thought what would happen in the Strait of Hormuz would happen? I'll let you into something. A week before that, I was in Dubai. Just very briefly. And I was saying to myself, oh my God, what kind of work am I doing that I spent 2 days there? I wish I could just spend 1 week and I was feeling very, what do you call it, romantic about the environment. Then a few days later when I left, and we saw the things that happened, it showed you, again, we talk about the volatility and the uncertainties of the world in which we live in, and the fragmentation. We're talking about transition into low carbon economy and all of that, and demographic divergence. This is from BlackRock. I want to speak more around, and this will be probably one of the last points. So this is from Blackstone, and one of their investment things that they published in 2025, but still stays very relevant. So what are the areas, mega trends they're looking at, and what are the areas that we should look for opportunities? Warehousing and logistics. COVID-19 brought the fact that, look, people are not really going into shops anymore after that happened, right? Hotels shut down for months, like people got used to not being in hotels. Gen Zs are also putting on the pressures to e-commerce. My kids, they're rarely going to, they're rarely going to shops. Most of them just order online, you know. So that's the reality of what we're saying. So warehousing and opportunities. For Blackstone, they had just 1% of their real estate portfolio, right, in warehouses. But they began to take a stake on this, and they were able to move it to 40%. Blackstone is one of the largest alternative fund managers in the world, you know, and they are big. So it's an example of that. You go to any of the countries now, they're playing a good. Office space is not what people would normally invest in anymore. Although JP Morgan's Amy Demon said everybody go back to work, and people are resisting, but that's the reality. Data AI centers, right? Artificial intelligence is powered by data, right? And that's the reality of where we've come to stay with. Digital infrastructure needs about 2 trillion in spend. And when we look at some of the other numbers, it says that total data generation has been doubling every 3 years between 2020 and 2025. A lot has been consumed, and a lot more will be continue to be consumed. We talk about clouding and all of that. So you find that some of these tech companies, a lot of them are doing well on the back of all of those. Power generation and distribution, and taking this as a US example, dramatic imbalance between supply and demand. We're seeing that in Nigeria as well. Generation is one, distribution is another, right? Some have seen the opportunities. In the US, the power grid that exists an average of 40 years old, and they lack capacity to meet the rising needs or demand, or to keep pace with the needs of the country. So, connecting energy projects for US transmission, the estimate is that the grid alone requires an estimate of about 3.9 trillion in investments. Again, so these are some of the opportunities, and I'm just reading out some of the data for us. So we talk about life sciences. This is a very sensitive area for me because I went through it. I saw the impact of being in an environment where there's healthcare and the importance of it. A lot of young people are taken ill. And we're seeing, the other day somebody was saying to me that, look, it seems that a lot of kids being born more with degenerative diseases and all of that. And we don't know what's happening, right? So it's even more important that we begin to take care of ourselves. But again, this is also an area where there's heavy investments that are going in the genomics and all of that. People are putting money in the research, the pharmaceuticals, the Monjaros and all of that. And it's big business. To launch a drug on its own, I had the costs, the patenting, all of that, the research, is roughly about 2 trillion, 2.3 that's sent to get that done. So again, these are some of the things we need to be mindful of. Consumer behavior. We talked about house spends. People are not going into shops anymore. These are opportunities there. They're either funds that create access into these kind of outlets or also direct investments, so we're putting money in through venture or whatever, but those opportunities are there. And then we talk about geographic focus. Markets, before people used to look down their noses at markets like Nigeria, India. There's a lot of interest now in our markets. You go on a flight, you see that it's half packed with expatriates, and you keep asking yourself, what are they looking for in Nigeria? But that's the reality of where we sit. I mean, I can easily share some of these research. It's available on Blackstone. I actually like it. It's a very good read. And it also tells us, the direction of the kind of opportunities we should look at. The way I look at it, it's like a moving train. If we say we're looking to build resilient wealth, it's two things. One is the right decisions, right, for investment. So the financial. But we should also make sure that the financials do not impede the goals of the others. So your mental well-being, your health, and all of that. Because if you don't have those, it's going to be impossible to have your financial goals, achieved. The other part is what kind of behaviors are we also teaching to ensure that wealth is sustained? Sustainability or resilience means that it can withstand shocks, right? Sometimes you build portfolios and you put in portfolio insurance on how the asset allocation will be managed and all of that. But it goes beyond that. Your greatest insurance is what are we investing in the next generation and the kids? What are we saying to them? What kind of examples are we laying to them? I was blessed with 2 boys. I have one left. But one of the greatest joys I have is being able to have conversations, open conversations with them. Sometimes we as parents will look and say, it took me a long time before I could hug my father many years ago. It was just not manly to do, right? but in this day and age, the needs that we have, not just as people who want to be resilient in the face of all that we're experiencing, but people who also want to be sure that we leave the right legacies for those that are coming. We must build the relationships. We can't be distant to our children. And that's the reality. Or to families, I've had to intervene in situations where people don't talk, brothers and sisters, and I tell them, which one of you tomorrow, if one of them dropped dead, would be happy to be in the graveyard alive? It's just not necessary. So again, I will say, I don't know, for those of us who've read the book, I'll recommend a book called The Psychology of Money. I don't know if any one of us has read it. But again, it begins to tell you that finance is not just, wealth is not just an act. It's not about having a CFE or CSI or any of those things. It's largely behavioral, right? You go and read about people like Ronald Reed. I don't know if those who've read the book. Janitor who was able to save us so many millions and leave an inheritance for his kids. And that was contrasted to somebody who was a CEO, very senior in one of the investment banks, who, all he did, he was spending, and he didn't really invest time to looking towards the future. I've spoken to those Bible passages before. That's what I want to leave us with. Probably not the most qualified person to teach you Bible, but let's just remember that good people leave an inheritance to their grandchildren, but sinners and children's children, but sinners pass on to the godly. Thank you very much. Questions for me?
Yes, thank you so much. So I think now we would just yield the floor to questions. Any questions you have about the presentation, about any other concerns or thoughts? Okay.
No difficult questions.
Thanks, Edo. Well done. Are we going to get the slides?
That's the first. We noticed that a lot of people were taking photos. The slides would be made available to everyone, free of charge. Completely free. So yes, so thank you very much for that. It's been a lot that we've learned. Questions, please.
Okay, thank you very much for the presentation. I think you alluded to it. So we're talking about resilient wealth, right? So in my mind, you talked about cash is king, right? So I could even be a Dangote, right? But does that mean I have cash flow? So can you speak to that, where yes, you're growing investments, but at the same time, you have enough to support your lifestyle, and both are growing progressively, and in the sense that even if you were working or you're getting paid, or even you're taking income from your business, right? If that's not properly managed, I imagine that what could be an opportunity to grow your assets ultimately affect your lifestyle. So could you just speak a bit more to that? Thank you.
He asked quite a lot of questions in one circle. Is it okay if I just... Okay, so I'll just take that. And see, thank you very much. I said something at the beginning. As wealth managers, we're not... the job is not to judge lifestyle, right? Or teach lifestyle. The job is for you to be able to show what are the outcomes of choices. You mentioned being in debt is not a bad thing. We see the great work that was done with the refinery, right? And we see what it is today. Some of us may not see. I noticed it because I used to struggle a lot with the quality of fuel that sometimes, you know, you buy because you don't know what these guys are doing with it, and then you see that your cars start having sludge. But I haven't had that, at least in the last, you know, little bit. So, but back to that, America's the greatest debtor nation, right? But it doesn't mean that they're not living well, if I'm correct. Or is there a larger debtor nation in the world? No. So debt is not bad. And you'll find out that most people who have done very well have had the tenacity to be able to assume debt, but they assume the right kind of debt. And they've also been able to be disciplined to take the right kind of decisions. I remember I was speaking to a young man who I'm close to, like family, and who's, you know, advising man. I just used to be amazed at the discipline with which he worked, right? You leverage, you buy emerging market bonds like Ghana. Then you saw what was happening. Some people were stuck, they didn't know what to do, still looking at prices to see maybe things will happen differently. This guy, he's just caught trader's discipline. He caught the position and he moved on. So back to your question, I mean, and without using specific examples, you can be wealthy, but you can also have a lot of debt. What is important, and that business people make, the mistake they make, is the commingling of their personal with the business. Some would stick even the family dwelling, you know, to leverage, to fund business. I don't advise it. And I think that as much as we work, whatever we're building should be separated, you know. That's why it's important to speak with a wealth manager. As a self-employed person, please pay yourself salary. Document it. You want to go to a bank with the loan or anywhere, or at least have regular drawings. You can show that this is what comes as income. What we struggle most is that when you come, we don't see anything, right? Okay, what have you filed as income? Okay, we start looking at the turnover in your account as a proxy. So it's important that at least you have, my opinion is that you have that discipline to work within an income. So also that you're not just making arbitrary drawings from the business, because people also watch, right? Also having the right levels of reserve. So again, I say to you, cash is king. Cash is king in the sense that you will be able to pick up opportunities that most people would not, simply because you are positioned and you're able to negotiate and say, look, we see repeatedly, a place is worth 8 billion. Somebody is desperate to pay off. You tell, okay, come and pay 3 billion for it. And you buy it. I hope that answers the question. Thanks.
Good morning. Still morning. Good morning. Thank you once again for the presentation. My question is for, is basically as an entrepreneur, when you're investing a lot of your types of wealth, your resources, time, etc., into building one entity that, you know, in our part of the world, exits are pretty far and few between, and obviously it takes a lot of time to build. How do you recommend that entrepreneurs who are kind of focused on building, especially in the long term, kind of diversify their wealth, or whatever? What investment strategies kind of complement the fact that you're kind of building one thing and you keep building it, and you know that's where your kind of your reservoir of
of wealth as it is being plowed to and your expectation of return is. So how do you kind of de-risk, I guess, that being an entrepreneur?
Okay, I'll just respond very simply. And again, what you've described is not peculiar to you. It's very commonly experienced, and even so more difficult here, where you have to make provision for a lot of things. I mean, infrastructure, you have the generator, you have to buy diesel, there's so many things going on. So the cash flow needs of a business, very high. As an entrepreneur also, you're taking a high element of risk. I mean, we talk about the complexities of the environment, the vulnerabilities, the uncertainties. Rules change. The government says this is an import banned list, whatnot. You get impacted. You don't even know what to do. So I think the important thing for you, and I think for business cycles as well, is that in the times of rain, you need to be very disciplined. Yes, you're building up a business, but also recognize that as soon as you begin to get cash flows, you need to be very disciplined in also segregating, again, what is yours and then what is the business. And I'll give an example. It's becoming more common here. So we talk about self-directed plans or self-directed pensions. People will say, Naira is not that strong, but still what it is what it is. There are people who, not just into the Naira, but also set up some form of self-directed pensionable, and there are structures you can set, even in foreign currency that you can put aside. They seem small, but they tend to grow in a long way. Even things around funding education, I've seen it, and I remember, and it's not just once, I've sat with clients that even using something as simple as euro bonds, right? Or they're buying bits and pieces into those, they've built up. And one of them told me, said, one of the best things you've showed me was that's how I funded my first daughter's education in England, because we started slowly, and over the years he had been able to build by almost in similar situations, but it was just the discipline to be able to separate what would be held back. I know it's easier said than done, because you're facing a lot of pressures, but the honest truth is that if you don't take those conscious steps, then it's going to be a lot more difficult. You talk about diversifying wealth. So again, it's about looking at the right asset classes to put money in. One of the greatest mistakes we make, and I say it even to my team, I slap some on the wrist sometimes, that look, you cannot over-concentrate in one single asset class. And you cannot over-concentrate, not even just in one single asset class, but also over-concentrating in one product. So when I say being diversified, put your money, those who will buy land, what you want to hold as liquid. It's important to have liquid cash that's backing up. Build up a reputation with your bank and all of that, so that they see your turnover, you see your assets, so that even if there's a need for leverage for projects, it's easy to leverage, and then also negotiate on the right terms. That's what I would say. Sorry, I can't think of anything else.
So, one of the things we know is that being an entrepreneur in Nigeria is a very dangerous occupation, especially if you're just growing from the start and the scratches. And we've been talking about diversification, banks, and what do we even need to do to be able to build this resilience that you're talking about? You're talking about diversification of funds, when even all your savings, sometimes I ask myself, I should have just sat down and continued being an housewife and enjoy my life, because what the money I'm making from my husband, and I don't have any care because he has to bring the money home, at least I still can afford to buy myself things. But these days, everything I earn goes back. Everything. And sometimes I'm like, I think I'm living a worse off life now than before. And so when I keep hearing saving, putting money here and there, it's like I'm wondering when.
I totally feel what she just said. Because for me, I for a long time just was at home, not really earning any income, supporting my husband to earn income, and never really earning any for myself. And then now everybody's talking about investing, and and I'm just wondering where does one even start? How small? How does it matter where you start? Can you start with little and then it grows, or is there some minimal place that if you don't get there, it's not really worth your while?
Okay, I think I'll take those two together. And sorry, your experience is not different from many people I speak with. But again, I think we need to be dispassionate in how we look at it. So let's even pull back and say, even for paid employees, it's not as bad in Nigeria. Those who work in the UK or other markets, why is it that we're giving up citizenship and they're going to take up nationalities in other countries? Because the tax burden is high. You earn a bonus. I was speaking to somebody yesterday, and okay, you get paid 100 million and then 40 million goes off the 100 million, then is the money really yours? So again, in your own case, I think it's worsened by the fact that as an entrepreneur, like you said, certain things have to be provided for. You do a lot more than typically you may have to do in other markets. And also the mental pressures that come from it. But let's also be honest, it's really not about starting big, but the little acorns. And I use an example. Many years, my late first son, part of what I paid for his first 2 years in uni was also setting aside $200 in a dividend fund. I used to work, offshore then. And I did it for over a year. I started early. So which is one of the principles they say that look, start early. But if you haven't started early, then the best time to start is now. That's the reality. And sometimes we overlook and say, okay, it's not small money. It's not small money. So that would be my first thing. The challenges you face will not go away. And I'm not going to say that I would advise either of you to say, look, hands off a business, because again, those who have often succeeded are those again who have showed resilience in how they've run their businesses. Those headwinds would always come, but that discipline to say, look, I'm going to stick it, and then be alive to your opportunities. Look for the right kind of funding. There are a lot of people who are doing VCs and stuff here. Look for patient capital and all of that can support you, build up a reputation that can build. I've seen businesses scale up, and they've done so very well. There are businesses that have survived for many years in Nigeria. There are others that have not. So I hear you, but we can't. And please don't stay at home, because that means somebody else, somebody else will probably be taking on his blood pressure will be going up higher than it should be.
Okay, I want to talk about the uncertainty, because I think that's the one that disturbs a lot of us. I've always been an entrepreneur, and I'm telling you that about last year I was about to take a job. I don't know whether I could get up at 8 a.m. or I go to work at 8 because it's not 9 to 5 in Nigeria. But I'm just wondering about, you've done all the proper things. You have saved your money, you have invested in the right things, you have invested in so much that I became very cash poor. And I really understand what you mean by cash is king now, because I missed out on a lot of opportunities because I didn't have the cash at the time. And I was advised by my financial bonds that, okay, sell something so that you're okay. But what I'm concerned about is that I almost feel as if I'm starting again. I almost feel as if I am back into hustle mode. And this is a time where I felt that I would be at the end of my career and I should be floating and drinking mojitos on the beach. It's not working. So how do we restart, at a time where you're already a bit tired? I can speak for myself. I'm tired. But I have to keep going. And our human capital here is the major problem I find, because we're all struggling finding people to be able to help us to achieve, because you can't do it by yourself. Now, that is one of the problems about Nigeria right now, that who do we get to walk this path with us? Because most of them don't want to work and don't want to do it, and the amount of fraud is astronomical. So how do we continue that? Just give us hope, please.
I'll be honest, I need hope myself. a lot of us go through a high level of stress, the environment. And what you said about being a business, we're not just dealing with structural issues, we're dealing with the behaviors. I've seen people run businesses and then the restaurants and stuff good, and then their staff are bringing drinks from outside and selling, you know, at the premium, and then they're showing that they're not selling anything, you know. Or somebody who's reputable business, you've been selling luxury goods, and somebody decides, says, okay, I don't sell Gucci shoes, but somebody says, I bought a pair of Gucci shoes for it. I said, no, it doesn't sell. Somebody in the shop brings something fake outside and sells to him. So how do you manage those? Or you put somebody in the till and they go and buy their OP or POS. You know, so again, you see, so sometimes when people complain about government, I say, look, the problem really is us ourselves. And let's be honest. You know, so the hope I can give to you, that's why you're in church. And they say, continue to show love. What's that? Continue to show love. It says, perfect love what casteth affairs. So please, your affairs will go away.
Okay, thank you very much. Still on uncertainty. Can you, in your own, maybe you might not be a prophet, but can you just can you just help me with where do you think the exchange rate is going in the next 1 year? I will take you at you won't take a word for it. Say it was the old that told me, but just your opinion.
Well, the political correctness of me, I can't say I'm not an economist, but what I can speak to is the data that we've seen. Reserves are growing, and I'm not holding brief for anyone. We went away with oil subsidy. Imagine if that was still there and the Middle East tension started. It will be. Only God knows where Nigeria would be, you know. So I think it's helped us. I think we're roughly around, how much did I buy? Bought some money yesterday. I don't remember how much. 139. You know, so at some point in time, you know, when we were at 700 and people say, we're going to go by 1,000. I said, that would never happen. But we crossed the 1,000. But I think we also came up to, at some point, at resistance. Yes, 1.6. And then that resistance. But what I can say that we see is a lot of the things that drives the exchange rate. One is market sentiment, and I think two is lifestyle. We can't stop it. Market sentiment is what it is. Even when the barber in a shop tells you, I bought $100, when you're out again, you know, then you begin to get worried. Why is the barber buying $100 to keep under his pillow? So again, it's based on what they're hearing and their expectations. But honestly and truly, I think we're in a much better place, honestly. And I think there's been efforts, from the center, the regulators, to make sure that the right decisions are being taken, even if they're not popular decisions. And we're seeing a lot of that. At a point in time, the divergence between the street rates and the official rate was so bad. But now even the banks have what you call B-match, which shows it's for price transparency, right? So there's a buy and sell of FX. I can't tell you precisely. I'm hoping and expecting that the Naira would further strengthen. That's my personal wish. And I say wish. You understand? So will that hold in the long term? That's the other question we should ask. Nobody planned for what would happen in the Strait of Hormuz, but it's also built up opportunities. The refinery is exporting, doing a lot more, building, well, it was, I can't say it's an act of God, but it was something that happened that nobody expected, So for me, I think at least in the short to medium term, we will continue to see stability across the the price, and then we're conserving a lot more in terms of foreign exchange and the discipline of it. What we also need to manage, I'm hoping that the schools will become better, so more of our children will school here. We all went, I went to first degree here, But I mean, that's not the norm anymore. So you can imagine, I have the data, you know, the number of kids that are going into colleges, into universities and all of that. Those also bring strain. You know, nothing wrong in having lifestyle and enjoying. You mentioned, Patricia, going to, was it Zanzibar? Where was it? Or Marbella? Or you know, it's a nice to have and mentally chill out. But again, these are the realities of the time. So my hope you would appreciate. Hopefully, would not see more than the 1,500 levels. I mean, that's the wish and desire for us. And I think within reason, it's been a bit consistent over the months. Elections.
Okay.
Elections, but like many things, I mean, look at the patterns of what has happened. Political uncertainty also brings volatility, right? Mm-hmm. You know, because once that happens, people begin to withdraw money, or you know, so some of the nations that Lebanon and, well, I can't use them as a good example, but sometimes when nations have had challenges, it's also because of the volatility that they've experienced. I use Ghana as an example. Ghana's currency is probably been one of the most stable, although they have seen a slight depreciation in more recent times. But I remember at least 2 years ago, or whatever, it was just in a disarray, you know. So, I mean, we could learn from them.
Okay, good morning. I wanted to ask with regards to, you mentioned asset classes. I like to believe quite a few of us in this room are above 40, so investing and building wealth is quite paramount. So I like to find out investment advice that you will give for in this season, apart from the property, land, like you mentioned. Where should we be looking at, you know, diversifying and investing for returns, and also looking at the fact that we want to also protect capital? Thank you.
Okay, sorry, 40s is young. Over 50, or did you say over 50? She said over 40s. Okay, over 50s. Let me. She said 40. Okay, let me put context to that, and I say that as a joke. But what we say in wealth, simply, your time horizon for investment matters. So that's why, I mean, back in the day, I worked as an investment and retirement planner. What we'll do for clients, we'll say, okay, you're 40 now, when do you want to retire? Okay, 60, 65. It's not like Nigeria. Okay, 65, I'll retire. Okay, 40 to 65 is 25 years. How much do you need to live? How much do you need every day now, right? Okay, I need, or in a year, I need $100,000, $150,000. Okay, we gross up with inflation and expectations in another 25 years. If this is compounded, you probably need about, what, 200, 180,000. What you've saved now, if we put that in an annuity, can that generate the income that you need at that point in time? No, so that's your gap. Then you begin to build on bridging that gap. And there are ways of bridging the gap. Honestly, 10 years is a long time horizon. You can do a lot, even 5 years. And why I say so, Nigeria is a place people say there are challenges. It's also a place, I've been in banking 30 years now. It's also a place where I've seen people take significant opportunities and things have turned in a way that you could least expect. I've seen it. And it's not everybody who's stealing money or anything. And I'm not just talking about the tech people or people who've done things, people who've done ingenious things, people who've packaged gari, who've done food, who've done so many things. You know, so my advice to you, diversification is very simple. And these are the rules, right? Generally would say fixed income, equity, and others alternatives. There's a lot more than that. Under the alternatives, you can also look at things around Bitcoin, stablecoin. It's good to have a little bit of exposure to those elements, because those are the ones that when they work well. Like the trajectory of growth is significant, right? For the fixed income, what the fixed income gives you normally is just the stable income. But again, that's subject to the risk of the issuer and all of that. But again, for fixed income, like the sovereign bonds, Euro bond, they do appreciate. I've worked with people, with clients where they've taken positions and they've sold right? And for the equities, we've seen the growth rate in the Nigerian markets. My challenge with equity, sometimes people misunderstand it and want to treat it like fixed income. It's not. So it's one thing if you want to look at equities and say it's a good to have on your book and you're seeing your money grow in numbers, then 2 days later you see it drops when you're doing a valuation. That's not the essence. You're either looking for, okay, well, what are my choice of stocks? Dividend paying stocks, right? Or am I looking for value stocks that would appreciate in value over time? Different considerations. It's important to have an exposure to the market because it's a market where, again, a 2-year difference and the right choice selection of a stock could mean significant wealth for you. So it's keeping a balance, but that has to be consistent with your profile for risk. If you're somebody who will be calling me at night, say, this thing dropped yesterday, don't call me. I won't invest it. I'm telling you the reality. I live with my phone by my pillow, and I've done that for many years. It's not good for sleep, but it's the reality. Sometimes people are panicked and they're worrying about, look, what's going on, or what's going on in Nigeria now, and what's happening. But you're very right. But like I said, stay well diversified. Look at those ranges. I'm happy to give more advice to you. There are things you can put in money in. Let me give an example. In First Bank, I didn't want to make this a bank conversation because obviously it's a church thing, but I mean, there are things you could you could do, like the funds that you could have access to, and with minimum amounts of $1,000 less $500, I can invest in, and at least you're seeing a yield of about 6.5–7%. Compounded growth, investing regularly. It's something that the discipline of, I used to do it, the education savings plan I do, taking a regular amount every month and putting in that kind of vehicle, you may be amazed at the results you can do. Today, $10,000 may not seem a lot for us, but for some people, I mean, God forbid having an adverse time of our lives, it's a significant amount of money. So it's just about that consistency. So rather than buying the next Birkin, let's take the money and put in. I'm just joking. You can buy it, but I'm just saying that we should, segregate. Make sure you're setting that aside. I'm sorry. No, it's good. Don't mind me. I'm just teasing. Yeah. Yeah. In dollar. The inflation rate and target for most of the developed markets, it's not more than 3.5%, right? So that's.
Thank you so much. I mean, I'm learning from all the questions that have been asked. I just wanted to respond to just one or two things that you said. The first thing, I mean, this is such a volatile environment. You talked about careful financial planning, watching what you spend, and the thing about that is, the exposure to shocks just on a month-on-month, day-by-day basis makes it very difficult to plan. The other thing that really caught my attention was this, the destination weddings. These destination weddings, I just keep, I mean, how do you plan for that? I actually had to ask, I initially asked, when I got this job, I initially asked for my salary to be in US dollars. After about a year and a half, I asked for it to be changed back to Naira because I was losing money. I was actually losing money. Now, I wanted to go back to what you said about the guy who had his rent increase and was thinking about a mortgage and was finding out that the mortgage repayment would actually probably be cheaper to stay on that rent than to, right? I want you to just maybe tell us a little bit more about that situation, and then on the fixed income, which you were saying could be as high as maybe 18%, but when you now consider tax on that, because that is now taxable, right? Does that still make that attractive?
All right, sir. Thank you so much for the very insightful session. My question will just be a very direct question relating to corporate management. So you said debt is not bad, but taking the right kind of debts. So I just want to confirm, when you are trying to build up a company, they actually need to build up some of their assets to also see how you can strengthen those kind of company. What sort of combination of debts do you think is good, given the volatility of our environment now, that when you take such debts, at the end of the day, you don't get to blame yourself for such decisions? Thank you.
Yeah, thank you for the presentation. So my question is in terms of how do we approach the equity market in terms of the stock market and extract value? I remember that my dad, for like the last 20 years of his life, I think he lived off the dividends from all the shares, you know, that he had bought. But today, we bought shares several years ago, and then the value went to, like, it fell drastically. So in terms of extracting value from the equity market now, do we have to be like traders, you know, buying, selling with a short period, or you can still, the old-fashioned way, buy shares, hold in the hope that you can get dividends and at least live substantially on that? Yeah.
Good morning, everyone. So my question is, it's similar to something Patricia said, but it's really concerning because for many of us who worked, right? You did all the right things, you invested, you saved, you did all the things you were supposed to do. And suddenly you realize that what you thought was a decent retirement fund is not so. Nobody, 20 years ago, the Naira was, I think it was 200 and something, or 118, I think, I remember. That was a number I remember because I was then on a dollar-based salary. It was 118 Naira to the dollar, right? It's now, yesterday, 1,406. So you planned yourself, you thought about, home, you thought about your living expenses, the odd, trip here and there. But suddenly you wake up and you realize that your lifestyle is now degrading slowly because the cost of living has outspent your retirement fund. So how do we, at this stage, speaking to Patricia's point, restart? Because for those of us who are retired, it's not something that is going to be an easy task.
Okay. Can I respond? I'm lost in the sea of questions. I'm just joking. I made notes, but please let me take them backwards and it helps. So the fourth, which you just asked, talks about the degradation of your retirement savings. Remember we said at the beginning, having a well-diversified portfolio and starting early are the keys. But if you don't start early, then the best time is now. The mistake people have often made is when they've saved, it's always been with one geography in mind, or maybe restricted to some asset class. I'm buying houses, or I'm just in Naira-based investments. It's where we are now. You need to have a global view of that. But if that has not happened, and I'm saying, for example, you're over, I'm just saying 50, 55, whatever, or around 60. I'm sorry? 60. Okay, so you're 60. Let me be honest with you. And what I've learned over the years, sometimes we take emotional financial decisions. Some of us will keep houses and say, we have this land, or we want to keep it for some son or some daughter or whatnot, or the sentimental values that lie. If you have an asset you can realize to cash with the new learnings you've learned, and if this is a scenario you've seen, please take a selective view of those assets and decide on which one you would dispose. But here's a caveat. If you dispose and you also do not have the discipline of allocation, you're going to be right back at the same place. And I've dealt a lot of times with people this way, and I need to be able to say it in a truthful way without judging. That is what it is. So don't hold on to the asset. A lot of our parents left houses, homes, and stuff I know the traditional Fanami Yoruba will say, the children shouldn't be wasteful or they've sold all their assets. No, that's not what we're saying. If there's a sense of purpose to say that, look, okay, I'm caught up in this situation and, you know, I'm going to realize this asset and then invest in things that will generate income, then please, by all means, do that. The exchange rate, unfortunately, is what it will be. You know, we can't change it. But that would be my advice. To 3, how... So, I'm sorry? So this spoke more about the approach to income, where to invest, right? Diversification, right? Again, that's also unique to the individual. The fact that your neighbor has invested in something and worked for him or her does not mean that that's the best plan for you. My advice to you is that you sit down. And again, I said 2 things, starting early and then being consistent, and then the discipline to stay invested are the 3 things I have seen that have worked very well for people, right? Please, I'll refer you again to the Psychology of Money. Read it. If somebody who's a janitor is able to save millions over the years on an income, living frugally and, you know, managing, and is able to leave an inheritance of, we don't have any excuses. It's about staying invested, taking the right decisions, and then also having the discipline to go on. Asset. No, it's a real, read it. Google him, Ronald, read it. It's a real, read. I read, yeah. Yeah, I read. It's a reality. But again, I say so, and forgive me, my job is not to give a judgment on lifestyle or anything. Trust me. Because I know somebody was saying about holidays, and there's nothing wrong in holidays. I've been to, by virtue of what I do, I've been to a few weddings and stuff, and I will still be more, right? But I think the important thing is knowing where. Please spoil yourself, enjoy your life, buy those bags. But the thing is that you should just know where to set the lines, right? Again, some of us keep money without purpose and we don't live well, right? Again, that's also a problem in itself. So it's just about drawing the line between that. So asset allocation, very key for the question you asked. And there are a lot of products you can, so the market has moved beyond. If you come to me, you can access both local and offshore products. That's a reality. At First Bank, we have an asset management business, a sister company. You know, we have several subsidiaries we work with, but most importantly, the competence to be able to sit down and advise you as to your step. I worked years as an investment planner abroad, so I know. I'm able to read the psychology of the person who's sitting before me and listen to them and understand what their pain points are, and then be able to guide them. So that's the key, the discipline of saving and the right asset allocation. Corporate management. So what kind of debt is good? What kind of debt is bad, right? What structure of debt should I be using? Again, let me give you an example. Some people want to fund mortgages. They go and buy a house in the US. It was common. And then they don't have enough down payment. They put some cash. Then they max their credit cards, right? And use it as part of the down payment. What do you think will happen? They can't keep it because the repayment rate on a revolving product is not the same on a term loan. So it's about having the appropriate fit of the debt for the kind of product. If you're looking at real estate, for example, they say high blood pressure is a disease for bankers and real estate developers. You understand? So, and I understand what they mean. So you're constructing, but you're taking an overdraft, right? It's better where you can raise private, I'm just saying private capital that's patient, so that you're not under the noose or the neck of saying that I have to pay back. And let me say something. If you're going to, you can do the maths. If the lending rate to you is 28%, it's a reality of the economy where we are. It's the same reason why the treasury bill rates will be giving about 15% or whatever, right? But how do you want to pay back, you know, at that rate? So cash, again, I say cash is king. And the cash flow. Mortgages, for example, if you look at our offshore mortgage, we have a business in London. We have a private banking team in London as well. People take offshore mortgages, right? The rules normally is age 60 is the cutoff. So if you are 40, we can only amortize for 20 years, right? In the US, the rules are different, right? Non-resident mortgage. In the UK, I mean, we have a product where at least it goes up to the age 70. So even if you're 50 or 60, you can still work with a time frame of about 10 to 20 years. The importance of that time frame is that your principal and interest, which is what puts pressure on most people, your obligations on a monthly basis would not go through the roof. So it's about knowing the right kind of debt. Please avoid, as much as possible, they keep offering all these offshore credit cards and stuff. I mean, they have their problems and their uses. Access family capital if you can. You know, look for those in this room who could help facilitate the family businesses, their family offices that are looking for places, looking for good ideas to put money. I'm not saying it's that easy, but it's like having the right fit for your cash flows that matter. And then you talked about careful exposure to the stock market. Yes, the NDX looks very attractive right now. But again, please let me make it clear. That is why we do a risk profiling of you as an investor, right? At one extreme, you're conservative, and the other extreme, you're an aggressive investor. If you're as a conservative investor, you're taking on stocks in science, technology, and all of that. Of course, there's a mismatch because the volatility will be there. But if you are judged to say that, one, I have enough net worth, or this kind of money will not kill me, you're open to risk, then you can make the selections in stocks that are a bit more volatile, but also could give you potential upside. There are those that are a bit more traditional, food, beverage, some of the drinks, you know, the Guinnesses and all of that, or Okomo, Palm, you know. There are a lot, I'm just, without giving any names, right? Some are highly priced right now. But again, it's about knowing where you sit in terms of your threshold of risk. Some are dividend paying. You made a comment, yes, somebody said it years ago, you know, we used to be able to sit down and plan on dividend, you know, 25 years ago. I don't think it's been quite the same, but I think at least looking at the financial sector, we're evolving towards that point where we're making an effort to say, look, we want to be consistent in us paying dividends to our investors. And again, you need to rate the kind of company that you're investing in. But profile yourself for risk. Don't say that you're aggressive when deep down you're conservative. You know, so there's a divergence on that. Because sometimes I struggle with this. People say, but this rate is not enough. And keep arguing with that. You don't know what else to tell them. Okay, go and do oil trading or something. You hate to put your market in a bit more risk. Somebody will pay you 15% on the dollar for that. But you should also be open to the fact that it can go either way. You know, so that's what I would rent or buy. Sorry, I think somebody asked that question as well. It's a common question. I've dealt with this for many years. The cost of renting, the reality is that there's an emotional stretch of dealing with landlords. You know, diesel, people are complaining every day. They're paying bills 1,500, 1,800 in diesel. You know, I've been victim of that. You see bills, you can't question them, right? Property management. So it's a reality. You know, so but if you look at your total cost of living here, it's either, look, somebody said it's in Nigeria we struggle sometimes. When prices went up, gasoline prices went up, and I noticed my neighbors started downgrading their gas guzzlers to cars because some of them liked all these big fast cars, you know. But here we struggle with a bit of, you know, down. What will people think? Again, it's not for me to tell you how to live lifestyle, but again, these are the realities of it, you know. So there's nothing wrong. Buy, I think, is important, the life stage. And then the cost of servicing that. If your P&I, the rules of the regulators is 33 1/3 of your income, not more than that, 3 1/3 should go towards servicing of your mortgage or home-related debts. But if it begins to get to 60 or 70%, I would not advise you to. One thing is to have an aspiration. The other thing is to have the ability to be able to meet that aspiration. They're two different things. You know, sometimes you can also take a stake, though, collectivity. Again, but this is where trust comes in. Maybe 2 or 3 people decide, okay, let's take a stick and buy something. That's also another option. You know, some people do JV. I've done it. I did it for families I know. And that's how at least they were able to own one side of the building, and the guys, the developers own the other side of the building. And they're happy today, because when they came to me years back, I mean, the first example, they wanted to sell. This was in Lekki, the 100 million, somewhere in Admiralty. What is the cost of Admiralty now today if they sold at 100 million? You know, so so that's what I would say to that. Then you talked about the income tax as well. It's not going to go away. I made that prediction years ago. In fact, it's going to become more intense, because the infrastructure projects to be made. Look at the budget. You know, go and read the budget again. So it has to be funded. The only thing is that you realize now that even low-income people are being taxed now, because tax filing was not compulsory then. They're making it compulsory. And you find out that people who are in lower too are also crying. But what that also does is that people will be asking questions as to, look, if I'm paying so much tax, then I'm going to be making demands that I have the right kind of infrastructure that supports me, or that I can open the tap and water comes out. Or as a business person, I don't have to be going to buy gas. And I'll leave on one note. My friend says NEPA came to his house and they were going to cut him off. I said, cut it, because he hasn't used NEPA in many years. He's been on solar, and well-structured solar for a while. I'm not saying that that's the right outway, but unfortunately, it's the situation we've had ourselves. I think I've covered most of them. Have I missed anything? Destination wedding, like I said, is good. Please enjoy it. It's a time. Please, I'm serious. Enjoy it. It's true. Look, we are stressed off. I wish I brought a blood pressure monitor. I would have said everybody one by one, come. I'm serious. Come and do your blood pressure reading. You know, I've had to deal with this body just a few days ago, and I shouldn't. I've had to deal with a younger person who just had a stroke. So I'm saying it in this. If you want me that I'm talking, I watch my BP and I say, look, how can I make it better? So please take your destination wedding. Please live your life to its fullest. But let's set the rules around what we want to achieve. Thank you very much.
Thank you. Thank you so much for that. Before we close, my job is to close us in prayer. Before we close, just wanted to say a few things that I heard. I think the first thing that he said, or one of the most important things he said, and he kept saying, was start early and stay consistent. And if you haven't started, start now. Right? Financial discipline without emotion. Don't make decisions based on emotions. We're all guilty of that. This is how they've always done it. You don't sell a house. You don't, all of those things. There was one word he used consistently all through his presentation that just kept resonating with me, and that was the word knowledge. We all, and this is really my main takeaway from this, we all need to build up our knowledge on financial matters. There are so many things we talked about, one of the examples was stocks and shares. Which stocks should I buy? The one that pays dividend or the one that grows? The truth is, the owners of the business tell us what they want to do. If you bother to read the small print of the business, you will know whether they're looking to go for growth or they're happy to just tick over and pay good dividends. If you ask the right questions, you will get the answers. Most of the time, we don't want to do that work to build our knowledge, or you want somebody else to do it for you. We need to build up knowledge in whatever area of this discussion that you're interested in. There was one of the slides which he showed. There was something he showed that really struck me, and I think we should not miss. He was talking about the growth areas. There was that slide that showed the growth areas. He showed things like warehousing and logistics. He showed things like AI. The question is, what are you supposed to do with that information? My thinking is those are the things to invest in. Logistics businesses, data centers. You know when we keep talking cloud. You know that cloud is a data center somewhere, right? So data centers, even a lot of money coming into the country is going into data centers. All over the globe, it's data centers. So the question is, how can you invest in those? Go and do the research, right? And start to invest in those. He also made the point about, I've talked about that, small. Now, there was another thing that struck me, and it's quite, I think it's relevant for a lot of us in the room. That is for those of us that are over 50 and 60, and I don't see many over 70, but anyway. Now, yes, we are getting tired. We don't want to do what we've been doing for the last 20, 30 years. But we have tremendous amount of experience, knowledge, and contacts. The last thing I wrote here to say to people is leverage what you have. People need that knowledge. People need your contacts. People need all of these sort of things that you have. I was speaking to a friend, a very close friend of mine. He's about my age. He's got a business. He's thinking of stepping down from his business. And then he was asking me about going into my line of business. And I looked at him and I said, I thought you said you wanted to step down. This your business is this. And I said, that money that you want to go and use to start a new business in this line that you don't know many people in, why don't you go and find people? Let's assume you are even interested in this business. People in this business that have established, that are just looking for that extra money that will help them move, and give them that kind of money. Help them. Take a stake in it. It's better than going to start from scratch. One of the things I've noticed a lot amongst us church folk is we're always thinking about what we have to do by ourselves. We can leverage, we can form cooperatives. All of these things are out there. There are people you've known for years and years and years. They have, what do I want to call it? Their personality type is one that you can, they're trustworthy people, they're hardworking people, and you can come together and do a few things together that will take all of these things forward. So you don't have to take all these ideas and do it by yourself. You can work with others. That's my summary. Anyway, you were going to do the presentation? What? You want me to do presentation? No, now woman they do presentation. See Pastor Mobo, let her do the presentation. Please, Vicaress Mobo. They are supposed to be handing shaking.
No, wait, we'll invite him. Please, let's clap for Mr. Idowu Thompson. Yeah. Before the presentation, I'd like to say a very big thank you. Thank you for the knowledge that you've shared with each and every one of us. I'm sure we've all taken something that we're going to use to grow. So I always say life is lived by knowledge. And we're so grateful for impacting the knowledge to each and every one of us. And on behalf of the house, Holy Trinity, Lagos, I would like to welcome you, please. So come up. I don't do this often. I'm not Pastor Victor Titi. So on behalf of HTL, we would like to present you with this gift to show our appreciation. It's a little token, but we hope you all enjoy everything that we've curated there for you. Thank you very much, sir. We appreciate it.
So on that note, I'll just say a word of prayer. Heavenly Father, we just want to thank you. We want to thank you for today. We want to thank you for the vessel that you've used to share knowledge with us. You say we should go and occupy, take dominion of the world. And today we've been given information that we can develop into knowledge and understanding in order to do that. Father, may we use that which we have received today, and may we continue to do you proud in everything that we lay our hands to do. And as people live today, Father, I commit their journeys into your hands. Thank you, Heavenly Father, because we've prayed in the name of your Son, Jesus Christ. Amen. Now is item 7 on the menu on the program, which is mingle, talk, ask questions, have a few bites, have a drink, and God bless you.
Yes, please. And please go to First Bank Private Banking and let's advertise his business as well. Let's advertise his hustle as well. So please network. It's time to network. Say hello to someone. Talk about what you've learned. See whether you can collaborate. 1 or 2 collaborations. And there's tidbits at the back for everyone. Thank you very much for coming again. Bye-bye.